Hey everyone, welcome back to CryptoCache. Thanks again for joining me here. Hope you're having a great day. Quick look here at Avalanche over the weekend, seeing what's going on here. We're going to dive into Elliott Wave here, potential liquidation levels, and just a few handfuls of best practice and big picture, things that most people need in their lives. Speaking of which, if you want this for more other people, because you found benefit yourself, hit the like button, comment below. Absolutely appreciate it. Help us get this in front of more people who deserve a fighting chance to be good traders without getting destroyed in the market, right? So taking a look here at Avalanche, let's go ahead and double check this. First and foremost, a lot of liquidation on the downside. That $33 mark we talked about recently, absolutely completely wiped out, okay? Makes sense considering what happened with Bitcoin. I do think though, personally, at this point with all that liquidation to the downside being wiped out, solid chance we're gonna see the price action continue further up from here. Again, it's just a pretty standard normal occurrence with liquidation where, every possible liquidation level gets swept. Now the bulls are gonna take it where they want it to. A lot of everyone else is gonna FOMO in later, and then they're gonna just get destroyed when the shorts get wrecked. So it's a lot of reasons why it's a smart call to pay attention to the liquidation and to pump the brakes sometimes too, not just jump right in because of that one reason, but also to ensure you understand kind of where we're at here in the overall sense of things. So let me explain more so we get a better perspective what I'm talking about. First of all, macro here, even though we do have most of the liquidation of the downside's been swept, we got to recognize too there's more potential for downside too. We're below all moving averages. So I don't want you to walk away from this conversation saying that CryptoCache told me to take a long position because the lower level of liquidity was swept. That's not how it works. That's just a contributing factor. When we look here too, another contributing factor ever since April 12th, roughly 1 month's worth of trading here, we can see point of control is at $35. I'm rounding up a little bit, but that 0.5 fib level, strong resistance. So until the price closes soundly above that, I don't think there's a reason to take a long position. If you want to take a long between now and 35, risk it for the biscuit, so to speak. Feel free, I guess, but it's just not the right way to go, okay? So again, there could be a lot of contributing factors that are telling us the price is going to go up, but the daily time frame is not one of them, okay? Everything here is screaming bearish divergence, and only thing we can see this, it is slightly positive, and this actually carries a little more weight than most, is having the money flow index being higher than the RSI. It's been like this for a while, so it really doesn't show you much, but generally speaking, when the money flow index is higher than the RSI, it kind of implies that there's more buying pressure, and the fact that at this point here we can see that pretty soundly at $35. There's a lot of reasons why the price isn't going to go too far from where it's at right now. Okay, it has to break through that resistance before it can do that. Now we have already seen our ABC pattern here likely fulfilled here, so solid chance we're going to see the price recover because of that. We also can see, traditional RSI, money flow index, they're fairly low, but they're not bottomed out yet. That does imply further downside is potential, or there is potential for that rather. We can see stochastic and MACD trying to converge but haven't yet. Okay, well stochastic is, but MACD is not. So there's not really a lot of signs here telling us the price is going to go up. Okay, we're below all moving averages, also disadvantageous. Again, closing at 0.5, that $35 or higher would be a solid consideration for a long, because we'd be back on track, so to speak. We'd be above that point of control. We'd be likely above all moving averages at the point, or at least 3 out of the 4, and then we'd have a fighting chance. Right now, there's really nothing here telling us the price is going to recover. If it does, it's mostly just that knee-jerk reaction to Bitcoin doing a slight pump over the weekend. So let's not get too ahead of ourselves. While we do have a small handful of long positions open as a community and only 1 or 2 shorts that have a small amount of profit left to take, I would say at this point here, it's not, no trade is a good trade, okay? But generally speaking, I do feel fairly safe and secure that Bitcoin should have reached its bottom recently at that $60,000 mark, sweeping majority of all that liquidity to the downside. So it would make sense for Bitcoin to do a slow rally up to that descending trend, potentially reject there and turn itself around, or break through, and we see the price continue further up. But either way, there's a lot of shenanigans in the market right now, and this is what they look like. Okay, so again, everything will be all well and good, and Bitcoin's like, I'm gonna have a bad day, and everything drops like a rock. This actually makes me think of it, if you take a look at this here, it's pretty much the case, right? Bitcoin goes down a little bit and altcoins just fall off a cliff. We're seeing that a lot right now. So just, again, please be careful. Keep your leverage and your position size low. Make sure you have a good wide range too for profit, or more importantly, your stop loss. If you have a tight stop loss, you will get stopped out pretty quick nowadays. And that's all well and good, and there's nothing wrong with that actually too. That's actually good risk tolerance, but just gotta make sure you work within your own risk tolerance. The summary here is that we're underneath the cloud, lagging spans, not free and clear, and conversion lines below the baseline. These are 3 out of 3 reasons to leave your short position open, or more importantly, close your short position soon, because we are starting to intersect with those things. So we're starting to see the shift in momentum. That's about the best we can say right now. AVAX is trying to change its ways. So until we can establish higher highs and higher lows, we have no reason to consider long, okay? I'm looking for a solid closure at $35 or higher for AVAX to have any leg to stand on. Cool, folks. That's all we got. Do me a favor, if you haven't already, like the video, comment below. Absolutely help grow the channel. Deeply appreciate that. You want to do something better for yourself, use my link to register, get some awesome rewards for the best exchange in the world. BitUnix, link down below, or CryptoCache.tech if you want to be a better trader. We've got a lot of new traders over there too. It's been a lot of fun. Thanks again for everybody. Hope you all have a good rest of your day. We'll see you in the next one. Take care.